This is just math. The red line is the price of gold. The black line is the price of gold if only the London hours were traded. In other words, from the AM fix throughout that trading day to the PM fix, if that was the only trading that goes on, and then you paste that to the previous night's close of the London trading only, what you end up with is gold went from 1971, it was at $35, and today it would be $2.24. If you only take the trading at the close of London when the rest of the world is trading, and you take those hours, the percentage change in price during those hours, and you paste it to the previous day's close of the percentage change of non-London trading hours. Everybody else in the rest of the world, you come up with $50,000 gold.
Hey friends, thanks so much for being here for this very important gold and silver precious metals update. I have Bill Holter on the line, but of course we kicked it off there with our longtime friend Mike Maloney, paying it forward to goldsilver.com. Mike points out exactly what's been going on with the manipulation of gold for so many decades. And you know what? The same exact is true for silver. A similar chart showcasing silver indicates a non-manipulated price for silver today would be north of $440 per ounce. Bill Holter is here to help me break down what I think continues to be a lifetime opportunity. Before we start, just a quick word about a very valued sponsor that I use myself.
We all know we're under attack, and not just from the air we breathe or the food we eat. We're being exposed to mRNA technology, injected into the food supply, spreading through shedding, and now 5G radiation saturating our environments with frequencies we still don't fully understand. These threats disrupt our biology at a cellular level, weakening immunity, inflaming our systems, and damaging our gut, the control center of our health. That's why I take Comex One from Brightcore Nutrition. Each capsule is packed with over 900 strains of probiotics, live enzymes, and antioxidants to help flush out toxins, rebuild gut balance, and fortify your immune system against the daily assault. Comex One is all natural and 100% made in the USA by a company that truly cares about your health and freedom. So if you want to defend your body naturally, this is where to start. Right now, exclusively for my viewers, you can get 25% off Comex One by using code SGT at mybrightcore.com/SGT. Or, better yet, call 888-688-0642 for up to 50% off. Free shipping only when you call. The link and information is below.
Hey friends, welcome back. Thanks so much for being here for this important gold, silver, precious metals update. Long overdue to get Bill Holter on the line. Before we start, though, I just want to point this out. What a joke. Paramount buys Barry Weiss's The Free Press for $150 million, and Barry Weiss, the liberal, will take control of CBS's news editorial vision, aiming for news that reflects reality. Well, wouldn't that be a sea change? Owen Benjamin notes, looks like Barry Weiss accepted the $150 million offer that Charlie Kirk rejected. Folks, I just can't tell you what an absolute joke this is. If MSNBC on a nightly basis can't draw more than 350,000 people, how in the world is Barry Weiss's Free Press Company worth $150 million? A little background, Barry Weiss was the op-ed staff editor and writer on culture and politics at the New York Times from 2017 to 2020. And since March 2021, she's worked as a columnist for the German daily newspaper Die Welt and founded the media company The Free Press. LOL. Ladies and gentlemen, welcome to the Matrix. Today, as we're having this conversation, gold touched 4,000 on the nose. And I'm glad to get Bill Holter back on the website, billholter.com. Bill, how are you, my friend?
I'm good, Sean. How about you?
Well, I'm doing all right. I mean, are these the times we've been waiting for or what?
Well, I mean, prices are higher, but this is not the end result. I mean, As far as gold and silver are concerned, they're just breaking out of the starting gate.
Breaking out of the starting gate. Bill's always a man of few words. Robobank Gold confirms the world has passed the fiscal event horizon. Ladies and gentlemen, there's no turning this thing around. Gold at $4,000, silver poised to break 50 any day now, but as fate would have it, well, the manipulators continue to manipulate. You guys might recall last week they hit the silver market with 234 million ounces of paper silver. It caused a $2 drop in the silver price, but by the end of the day, silver was back up $2 to finish right where it began. Today, another hit, this according to Wall Street Silver. The manipulators have shown their hands. A massive dump of paper contracts in the middle of the night. They're scared shitless, I would say. Ladies and gentlemen, if they knock silver back down to even say 45, do you think the buying won't ramp up? We got a lot to cover today. Bill, what do you make of the current price of silver, 47.70? They kneecapped it a little bit today.
Yeah, I mean that's daily movement, but I'd like to point out that silver has already traded. If you go back to 1980 and you go back to 2011 and you look at a chart, the amount of time that silver spent over $48 could be measured in minutes. And I mean, here we've been trading in this range for 3 or 4 days. So we're already basically above that zone because the real zone back then in 1980, the real zone was, call it $42, $43 high, $45 high. It spiked up and didn't hold for the day and immediately reversed. And then in 2011, we closed on a Friday. I think we were up a little bit on Monday, and then Tuesday it got smashed. So this is a little, I mean, this is a little different where there's more of a foundation below this.
I've been wondering too, Bill. So if it was $50 in 1980 and a movie ticket cost $1.50 and a gallon of gas was what, 97 cents or whatever, what do you think the actual inflation adjusted all-time high would be? Would we be talking closer to what, 100, 150? I mean, just to really, what $50 all-time high, that's $1980.
Yeah, I think the number would work out if you added inflation to it. It'd be about 170.
Okay, so the money printing alone that's occurred since 1980 should give us a nominal all-time high of at least 170. But, as so many researchers have indicated, just take out the Wall Street Open and the banker manipulation, we'd be north of $400 silver today.
Right. Oh, and Sean, I do want to go back. You showed that the Zero Hedge article that we've passed the fiscal event. That headline translated, because I posted that on my website today. That headline basically is saying what I've said now for the last 3, 4, 5 years is that mathematically the debt cannot be paid back in current fiat terms. The only way to pay that back is to devalue fiat to make it easily or able to be paid off, because the payoff cannot be done with current values of fiat. They've got to have more fiat outstanding, thus less value per unit.
Debase. Gold at $4,000. $4,000 gold when our friends, neighbors, and colleagues don't own even an ounce of silver. I swear, Bill. Nobody owns this stuff. Precious few people own this stuff.
But Sean, that's what this article is about. It's telling you that gold has already sniffed it out. We're already past the point of no return.
Well, let me ask you about current market conditions. Okay, the paper charades are coming to an end. Although they still try to throw paper at the market, obviously, they are losing control. Who am I talking about? The criminal banks. The Comex and the LBMA are running dry, and David Jensen just put out a memo the other day saying the cost to borrow SLV silver ETF shares has soared to 8.5% from 2.5%, Bill.
Well, that tells you that there's a scramble for immediate physical metal. And that's also borne out by we're starting to see backwardation, which is where the spot price goes above futures. And that tells you that people want metal today, not next month or 3 months or 6 months from now. They want it and they want it now. And I mean, that just makes sense. I mean, if you look at the imports, the Indian imports this past month, they're basically double ounce wise, not dollar wise. They're double ounce wise of what they had been importing. So silver has become a very serious importer. And there's also stories of a lot of sovereign mints around the world that they say they're out of silver. Now, if we were first week or second week of November, I would say, well, that's no big deal because they start to ramp up for the 2026 production and they stop making 2025s. But it's too early for that. And that you should keep your eye on that. If this is for real, that foreign sovereign mints are out of silver, and of course the only reason they'd be out of silver is being out of blanks. If you remember years ago, Jeffrey Christian was saying, "Oh, that's no big deal. They just can't get the blanks." Well, the blanks, that's the silver.
Well, the other thing too, okay, so there is a physical silver shortage in the warehouses in London at the Comex. We're now hearing reports that some of the retailers are running dangerously low on silver. Monster boxes getting hard to come by in some cases. And I wanted to just share this with the audience, and I've talked about this a lot, how preposterous this number is. They're saying that the silver market is the sixth biggest market on planet Earth, worth $2.7 trillion. And I just love to remind people, just a heads up for the whole world, silver can only be a $2.7 trillion market if you include the criminal banksters' paper derivatives and tens of billions of their phantom ounces of naked shorts. When looking at only physical silver at $47 per ounce times 800 million ounces mined globally per year, you get to about $38 billion, a far cry from 2.7 trillion. So maybe that's the writing on the wall, Bill. Maybe silver really needs to get to a $2.7 trillion market cap by multiplying a real silver price times, say, 800 million ounces mined globally in a year. So did you realize, Bill, that at $500 silver times 800 million ounces, that would still only equate to a $400 billion annual silver market? Anyway, I think that whole number is absolutely preposterous. That's all derivatives.
Yeah, what you're describing is it's taken $2.7 trillion of paper to keep the price where it is now.
There you go.
If that 2.7 trillion of derivatives had not been thrown at the silver market, which is laughably small. I mean, total global production, like you said, is about $40 billion. In today's world, $40 billion it's not even a ham sandwich. It's nothing. It's 40 billion gets thrown around left and right every day. And so it's such a small market, but like you said, they've created 2.7 trillion in paper, or call it 2.5 trillion, whatever, of paper to suppress the price and keep it where it is now.
Yeah, and I want to go back to this article here from our buddy David Jensen. I'll just read this part because I want you to remind the audience. Sometimes I forget. Is it JP Morgan that is the custodian for SLV and HSBC for the ETF GLD? It's so interesting to know that the criminal banks are the custodians for what should be very valuable investment vehicles that should hold mountains of physical metal. The question is, do they? So the borrow fee for iShares SLV Silver Trust Exchange Traded Fund ETF has increased to 8.5% from 2.5% on Friday, October 2nd. According to the SLV prospectus, this ETF can operate as a source for bullion banks to secure physical silver in 50,000 ounce lots by tendering shares to obtain physical silver bars when desired. For instance, the metal is otherwise scarce in the market. By borrowing SLV shares, physical silver can be obtained by bullion banks and other authorized participants without moving the SLV share price higher. Can you believe this, folks? The fix has been in for so long, but now the Chinese, the Shanghai market is really changing the game in real time before the whole world's eyes. Do you think I've got that right, Bill?
Yeah, you do. And think about this, Sean. The Chinese are opening depositories all over the world, and that's to be custodian for gold. And what that's saying is they don't trust New York, they don't trust London. They want their own vaults. This is a complete bifurcation of East versus West.
Which bank do you think, Bill, is the most in trouble when we see these $1, $2 updates in silver? We've seen this thing go from 31 and change to 48 and change. 49, it hit 49, I think, briefly the other day, didn't it? Who is in the most trouble at this point? Is it Bank of America?
Yeah, I think Bank of America because JP Morgan, yes, they're short, but they have longs. Uh, and what you were describing just a moment ago with SLV, if they borrow SLV shares, from an accounting standpoint, it's the same thing as holding physical silver, although it's not in reality. But from an accounting standpoint, it's the same thing as holding physical silver that they can put against some of their shorts and neutralize uh, the oversight of their balance sheets to say, no, 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 we're not short. We're not short silver. See, we have these SLV shares on our books. Of course, they're leased, they're not owned, but it gets them past the whatever audit they're trying to pass.
Mm.
Well, I know the normies are finally waking up to a little thing called inflation, but I don't know that the average person understands why inflation, who causes inflation. I don't know how many people, normies, understand how much $37 trillion in debt is. Geiger Capital notes it's not that gold is going up, it is nominally in USD, of course. The denominator is being rapidly debased. Your dollar's going down, folks. So gold, yeah, it's going up in dollars, but that's only because the purchasing power of the dollars that you trade your labor for are going down, and I would say plummeting. Yesterday alone, Bill, did you notice gold was up 80 bucks an ounce? 80 bucks an ounce in a day. Now go back to the year 2000 when you could buy an ounce of gold for 300 bucks. Did you ever imagine? Well, I know we did. I know we imagined a day when gold could go up 80 bucks an ounce, but man, I did not think it would take this long. We've been having these conversations since what, Bill? 2011, 2010?
Yeah, I think we started in 2013, 14. Yeah, you're exactly right. Fiat is collapsing. If you look at the price of gold, just go back less than 24 months ago. So less than 2 years ago, gold was just under $2,000 an ounce. So in less than 24 months, the price of gold in dollars, and of course other fiat currencies, has doubled. And what that tells you that in less than 24 months, the value of fiat currencies has been cut in half, the purchasing power.
I want to show you another thing here, and I want your input on this. I see this a lot from Bitcoin folks who always like to try to call a top, and the streets are littered with the bodies of the dead who tried to do that over the past decade plus. But this guy, Cycles Fans, over on Twitter, notes that the GDX is more than 120% above its 200-week moving average. Classic bubble top. Now, I'm not sure how anybody who understands money printing and the fact that the Fed is going to lower interest rates and is already lowering interest rates, and that the money printing is only accelerating in China. It's certainly not going to stop here in the United States. I'm not sure how one arrives at this conclusion that the miners are in a classic bubble when gold just hit 4,000 and the currency is now being debased. What do you make of this guy trying to call the top in the mining stocks?
Well, I think it's laughable because the miners peaked in 2011. If you use the HUI index, uh, was as high as 600 back in 2011. It got down. I think the low was in the 160, 170 range and chopped between 200 and 300 for many, many years. And just now, just this year, finally, from below 300, yeah, the miners have doubled. So are they due a pullback? Yeah, they're due a pullback, but this is not bubble territory. We're only back to where we were 14 years ago. And there's also a big difference. Back in 2011, mining companies, they basically acted like idiots. They went out, they threw money around, they were spending money. They lost control of their spending. And then you had the peak in 2011, and investment turned completely away from the miners. It was impossible to finance projects. And of course, that created less drilling, less discoveries, thus less production. And today, the mining sector doesn't even resemble what it did in 2011. You've got spending screwed down. The spending is extremely tight. They're watching what they're spending, and that means that their cost of production has remained low. So the profitability today in the miners with a 600, just over 600 on the HUI, they're probably valued triple what they were back in from a true value standpoint. If you look at cash flow, price to book, et cetera, they're probably 2.5 or 3 times. They were 2.5 to 3 times higher than they are now. They're much more valuable now, but yet the index is still at 600.
Well, I just think it's laughable in an era of debasement, the debasement race all over the world, to try to call a top in the gold price or the Bitcoin price or the silver price. These are tangible assets, and they're very, very rare in a world of paper. And that includes your stocks, guys. The things you own, the things you think you own, those stocks you think you own, seed and company, end of day settlement, held in your broker's name, not your name. I'm telling you, physical silver and physical gold. Go ahead, Bill.
The great taking. I said the great taking. That's what you're talking about.
Yep, the great taking. And Mike Maloney, he's been waiting for this moment for a long time. Let's listen to a brief clip from Mike Maloney. They are losing control of silver and gold prices.
But this criminal price suppression actually is the great opportunity that has been provided to the precious metals investor. They are losing control, and as they do, the price will explode. The dollar has lost 50% of its value versus gold in the past 3 years. 50%. Understand where we are. You now live in a third world country, and boy, is he right.
And boy, is he right. You know, I wanted to make this one short and sweet today. I just want people to understand it's not too late. $50, $47 silver, Bill, is still an artificially manipulated, very, very low price. And I think it remains a lifetime opportunity. Silver in physical form is rare, it's precious, and it was just declared to be a strategic national security asset by the U.S. government, and I believe the Russian government. Bill, it's not too late. That's why I wanted to do this, essentially an emergency broadcast. Physical silver, folks. Physical silver.
Yeah, no, it's not too late at all. I mean, $47 on silver, it's still the cheapest asset on the planet. And Sean, you and I did many, many interviews over the last 10, 12, 13 years, whatever. And yeah, was it irritating to see the price get smashed, to watch the suppression all that time? Yeah, it absolutely was irritating. I mean, I can't tell you how pissed off I had been, many, many days. But looking back at it now, they were giving us a gift.
Yeah.
I mean, I work as a precious metals broker, and I look back at all the orders I've done for the past 10 plus years, done under suppression. So people were buying, anytime they bought silver or gold, they were buying something that was suppressed by man. And that suppression is going to break. It's in the process of breaking right now. And as I've said all along, it will end up in a failure to deliver. And then once we have a failure to deliver, then what type of pricing are you going to be looking at? And I want to remind people that back in the late 19 teens to 1923, an ounce of gold in Weimar, Germany went from 170 Reichmark to 3.7 trillion in 6 years. So that's like saying, okay, we're a couple years into that experience. And remember, They didn't have computers back then. So trading was nowhere near as lightning fast as it is today. But I mean, you could look at, and I'm just doing this off the top of my head, but by 1919, 1920, gold was only a couple thousand Reich mark or 5,000 Reich mark on its way to 3.7 trillion Reich mark, which basically means the currency went to zero. And that's where the world's fiat currencies are going because the debt cannot be paid. The debt will default. If it defaults, then the currencies zero out. If you don't see default, the only way to make the payments is to, like you said, debase, debase, debase.
That's right. And I want to drive the point home. Okay. What they've done to silver and the price of silver for decades now, guys. I like to say that this thing has 55 years of suppressed energy behind it. Once we break through 50, got to tell you guys, these banksters have tried to and successfully demonetized silver in the minds of the people. But when you hold this precious metal in your hands, you know that's a lie. You know it's precious and valuable, and sooner or later, all things revert to the mean. Silver, too, will be valued, highly valued once again. And we'll round out the conversation before we plug Bill's site and how you guys can get precious metal. Bill can help you with that if you'd like. Here's Mike Maloney. Silver buyers know a secret.
And I want to read this backwards here. So we're going down to this lower post here. Physical buyers are circling. They're not scared of this dip. They're waiting for it because they know a secret. Sellers of paper contracts who can't deliver are playing a dangerously risky game. You can't print physical metal. And then here, UBS raises its forecast and says silver is headed for all-time highs. Now we know which one of these bandits have already covered their shorts. So this is the article about UBS raising their estimates for silver and admitting that it can go to all-time highs. And no big investment bank like this wants to start promoting something until they've changed their position from being short to being long. So UBS is now probably in a position, if they're saying this, they're probably in a position where they can make gains from silver going up instead of having a motive to keep suppressing it.
I'm just trying to get people into this asset before it's too late. Let me pause it there. Bill, I'm coming back to you. I'm just trying to get people into this asset before it's too late, because would you believe that I've had conversations with some of my neighbor friends about this asset class, silver and gold in physical form, specifically over the years? None of them have asked me how to go buy it. I mean, the average normie still doesn't care. And it makes me wonder, Bill, it makes me wonder how people are going to survive hyperinflation of their dollar, because that's what's happening when priced in gold or Bitcoin and or silver, frankly. The dollar's starting to hyperinflate.
Yeah, well, they're not going to survive hyperinflation. I think the number is somewhere around 0.5% of all Americans own either silver or gold. So, I mean, that leaves you 99.5% of the population that's naked from a financial standpoint.
Wow. Heady times. Heady times. Can't believe it took us this long to get here. But to your point, they really did us a favor by giving us years and years longer to stack than we thought we had.
Now, this is just little by little, day by day, bit by bit. But this criminal price suppression actually is the great opportunity that has been provided to the precious metals investor. They are losing control, and as they do, the price will explode. This is the metaphor of pushing down on a spring, and when you lose control, it's going to bounce a lot higher.
BillHolter.com. Tell people how you can help them, Bill.
Yeah, you can go to my website, BillHolter.com. If you want to contact me directly for precious metals business, my business email is bholter@proton.me.
Very good. Bill Holter, longtime friend of the show. Guys, I'll leave a link to SD Bullion below, too. They're my sponsor. I bought a lot of metals from them over the past, but Bill Holter's a personal friend, and I do endorse him. If you want the personal touch, Bill Holter's your guy. We'll say our goodbyes. Bill, I want to thank you very, very much. And I guess, just to put you on the spot before we turn this thing off and say goodbye, put a price on silver over the next 12 months. What do you think?
Definitely much, much, much higher than it is now. Uh, I would think at least 75 to $100. And actually, we're talking about once we get over $50, you're going to
Yeah.
see contracts blowing up. So that takes any real number that you can throw out there off the table. And I've said for years that any number that someone puts on gold or silver as a final top is going to be laughably low, and the actual number will be many multiples of whatever that highest forecast is, because the opposite of zero being the value of a currency, the opposite is infinity.
Well, that's a great point. And I'll remind the audience of the artificially high value of the silver market because of the derivatives. It's not a $2.7 trillion market, guys. It's beneath a $100 billion market based on the amount of physical silver they pull out of the ground globally in a year. So consider the fact that the U.S. government creates another $1 trillion of debt every 100 days. And you tell me if you shouldn't buy physical silver. Well, you still can. Our guest has been Bill Holter. Bill, thanks so much for coming on for this quick update.
Thank you, Sean. I enjoyed it.
All right. Appreciate you guys. Bill's link is below. The link to SD Bullion is below. And we appreciate you very, very much. Do the right thing for your family while you still can. Not investment advice, just what I've been doing. And I'll remind you guys every single day for free. Check us out to get the real news, the antidote to corporate propaganda 24/7 at sgtreport.com. Till next time, God bless you and yours. Bye-bye.
Canada is not a free country. They can come and take your property, hundreds of thousands of dollars work. They can slander you. They can imprison you. They can do whatever they want with you. And we, the animal owners, farmers, breeders in British Columbia, we have no rights and no protection against SPCA. Don't go to British Columbia to do business. This is not a free country anymore.